Hey everyone, Coach and Uncle Henry here, and I just wrote a book and times are really tough, and I just kind of want to go over in this video, no practice, just impromptu video on why times are tough, why it's kind of over, and some of the hard stuff that I had to do in my personal life and in my trading life. The book, by the way, is the first link in the description. It's a book on option trading and how to become the steadiest option trader in the world, my journey and my mistakes. And specifically, the book talks about strategies, but it also tells you a story of how I went from basically nothing, a poor immigrant, to now having a seven-figure portfolio, and the strategies and tools that you have to open trades, manage trades, close trades, the softwares that I use. Basically, a book that is for beginners, intermediates, and even advanced traders on learning the foundation, the intermediate skills, and the advanced skills of trading options, all in 106 pages. The book price is the same as 2 coffees, and I plan to donate a portion of the proceeds to my mother, who helps animals in need. My mom actually volunteers every single day, and she doesn't work anymore. I'm just supporting her currently because she wants to follow her dream of saving dogs, rabbits, and other animals in need. Yeah, it's pretty cool that I'm able to do this, but I also have some harder news. And the harder news is actually, if you take a look at my portfolio, things are going really well, and I'm currently up about 8% on the year, and I'm currently up about 8% in the past 3 months, which, to be honest, is pretty hard. And I kind of want to talk about something that's really difficult that's happening in the market right now, which is, surprisingly, the market is very stable and bullish. And despite this kind of being a good thing, well, it's really not. And the reason for it is because although some people are making money, a majority of people are making a lot of mistakes in this market right now. So I'm having a very consistent return, but honestly, I'm not super excited about 8% in 3 months. And I feel like my performance is kind of not where it used to be, and I just kind of have to own up to that. I typically like to make about 4% per month, or even more than that. And lately, I've been taking a lot of risk off the table, and I feel like I'm just kind of scared. As the market continues to go higher, I'm scared to be aggressive. I'm scared to be in positions that are more likely to make a lot of money because those positions are correlated with higher risk. I don't like taking a lot of risk because now that I have a community in Discord and all of these people are following me, I sometimes get really afraid of making higher risk plays because now it's not only my money, but it's everyone's money. And that's honestly the truth of why I decided to be a lot more steady. It's because I really can't afford to lose money. Not only for personal reasons, because I'm traveling the world and I really need this money to live on, and I don't know how long my career is here on YouTube, right? And actually, the fact of the matter is it's really hard that I actually had to let go of one of my coaches. I recently had to fire one of my coaches because with this current market environment, people are actually not as interested in learning to trade because the market is so good, they don't really understand the value proposition of making more money or preparing for bad times. When times are okay, people are okay. They're just happy moving along as they are. It's actually pretty funny because when the market is down a lot, only then do people realize that they need a coach, they need someone to help them. Or when the times are really good, people are like, I want to make more money. But what about now? I mean, right now is actually the hardest time for me personally because I love helping people, and most people right now are just coasting by. And that's not a bad thing. I'm happy for people. But how about preparing for the bad times or positioning yourself to experience more good times as they come in the future? And right now it's just a really weird market environment. I've never really seen a market that just continues to go sideways for basically 3 months. I mean, there's definitely been periods like that, and I've really done well in those periods because I would do iron condors, I would do spreads. But right now, the implied volatility in the market is not that high, and that's why my returns are lower. And it's kind of a really weird situation because I actually like tough times. When the times are tough, I like to kind of get in and buy stocks that are going for a value, stocks that are discounted. I like to sell puts because the implied volatility is high and I like to collect a big premium. And when the market's going up, then it's also really interesting times because you can find stocks that are peaking, that are expensive, or you can just ride the wave as the stock market goes higher with some bull spreads. So for example, like a bull call spread, you can benefit as the stock market rises, you can double your money in a fairly short amount of time. And I do rely on strategies like that. But right now with the market going sideways, honestly, a lot of people are just happy and they're content, and that's fine. Sometimes there are seasons to life and it's okay to be content. And the hard part for me is I have so much free time. I have so much free time to just kind of do whatever, and I don't even know what to do with my time. And that's why I had to let go of one of my coaches. The times are pretty good, which is actually not that good because people aren't taking action. As investors, you should always be thinking about more opportunities or protecting yourself against the future. And that's kind of what I also hate. So many people will invest in really risky stocks when the times are good. They'll be super happy and they think that this money is just going to keep flowing and flowing into the future. But that's not the case. When times are good, that's great. You should be saving money, putting it away, but you should also be preparing for a rainy day. And any day now, I can expect to see the market falling down. I mean, really, I think that now could be a good time to buy puts. But of course, I'm not a speculator. I'm not a bear. So I'm not going to do that. But if I was trying to speculate and if I was looking to make a large return in a short amount of time, I would look for opportunities in the market that are, going to be buying puts or put debit spreads where you're paying money to bet that the market will go down or that a certain position on a stock will go down. Some of these more expensive stocks that have high price to sales ratios. And essentially, because these times are so weird, I've had a lot of time, and that's why I decided to write the book. I wrote a book on option trading and all the strategies like covered calls, selling puts, spreads, but also lots of technical analysis. Because for me personally, there are two ways to value a stock. Okay, the first way is fundamental analysis, and the second way is technical analysis. Now, fundamental analysis, I'm just going to be honest with you, is a lot better. And I took a lot of courses back in college when I worked at Goldman Sachs, when I was an analyst on Wall Street. I've noticed that so many other analysts are basically spending their entire day modeling companies. They're modeling cash flows. They're modeling future projections for revenue. They're modeling earnings per share into the future. And then they're using those numbers and discounting them using basic finance principles. And they're finding a value of a company. And that's how they actually invest in a company on a long-term basis. Okay, so fundamental analysis tries to get to the root valuation of a company. Like, what is this company actually worth? What is its cash flows into the future worth, discounted to the present day today? So that's fundamental analysis. And then technical analysis is just using a time period on a chart to look at an indicator that is saying if a stock is expensive, cheap, or if it's valued right. So some of those indicators are stochastic oscillators, they're Fibonacci's, they're moving averages, they're RSI's and Bollinger Band, and many, many more. There's in fact so many different indicators out there. There's different indicators based on physics and mathematics and statistics. And to be honest, a lot of those indicators can be useful, but in my experience, they're just not super useful. I like to be super simple, super boring, and I do like to be really lazy. And the fact of the matter is I've gotten fired from a lot of my jobs. And I've said this on this YouTube channel. I'm being as honest and open with you as possible, that I like to trade in a way that is really boring because I just want a consistent cash flow. I'm not looking to get super rich. I don't know what to even do with tons of money, right? I'm not a big spender because the way I grew up with nothing, now I just enjoy the simple things like being able to travel and just having a nice hotel room. I don't really spend that much aside from eating out a lot because I do like restaurants. But, aside from that, I'm not really a big spender and I don't really need fancy things or fancy clothes or fancy cars, although maybe at some point I might, try some of that stuff. But in my opinion, it's just really important to be financially secure because once you're financially secure, then you can focus on your mental health, on your family, on, kids, on philosophy, on your beliefs, right? Just focusing on becoming a better person, more in shape, more healthy. So, I feel like I'm rambling, so I'm going to end this video. But the fact of the matter is times are kind of interesting right now because the market is just going sideways and I am doing really good. But a lot of investors right now are just coasting by, and that's totally fine. We can all kind of coast together. But I just want to inform you that we are going to come through some more bad times in the future, and it's really important to be prepared. And it's also really important to prepare for the good times and more volatility to come because I don't expect the market to continue to just go sideways with very little implied volatility. In the meantime, as we coast together, if you do want to grab a copy of my book on becoming the steadiest option trader in the world, you can check out the first link in the description. And if you need anything, just let me know in the comment section below. I do love to read your comments, and it is really important for me that you guys are engaged with this channel because the whole reason that I'm doing this is to help others. So if you leave a like on the video, if you subscribe with notifications on, and if you leave me a comment, I will be super happy and I'll make sure to respond to the comments and make future videos based on what you tell me.